You ever notice how the holidays just kind of sneak up on you?
Oh, yeah.
You're sipping on that pumpkin spice latte, and the next thing you know, you're like elbow deep in holiday shopping.
Yeah.
And honestly, it feels like that whole shopping frenzy starts earlier every year.
Oh, absolutely. I feel like the line between back to school and holiday decorations is definitely getting blurred.
Right. What if we could take all that holiday shopping craziness and actually turn it into an investment strategy?
Interesting.
You sent over some articles that got us thinking along those lines. Wondering if there's a way to capitalize on all that spending.
Yeah, you have a real knack for finding these connections.
Thank you for tuning in to Quantopian's Quant Radio, your AI-driven podcast exploring everything related to quantitative finance. If you enjoy this episode, don't forget to like and subscribe to stay updated on future releases. For more quant-focused content, join us at community.quantopian.com. There you can explore a wealth of resources, connect with fellow quants, engage in insightful discussions, and enhance your skills through our extensive range of online courses. Quant Radio is intended to help people develop their knowledge and skills in quant finance. This podcast is not intended to provide investment advice. And now, back to the episode.
One of the articles you shared was a blog post. And the author was talking about finishing their holiday shopping super early, hitting up all the big sales like Prime Day, Black Friday, Cyber Monday.
You know, the usual suspects.
Exactly.
But here's where it gets really interesting. The author started thinking, okay, if shoppers are spending more during these super specific times, could that translate into, a way to make some savvy investment moves? Is there a holiday effect in the stock market that we can tap into?
That's a fantastic question. And actually, that's something that the Quant Connect research team actually looked into. They focused specifically on Amazon's stock performance around Black Friday and Prime Day to see if there was a noticeable pattern. And for context, they compared it to the S&P 500, which is basically just a snapshot of the overall market performance.
Okay, so they basically created these graphs showing what Amazon's stock price was doing in the 2 weeks leading up to Black Friday and Prime Day. And what they saw was actually pretty eye-opening. It looked like Amazon stock had this tendency to rise during those 2 weeks. And it was actually outperforming the general market. It was almost like it was getting this boost from all this anticipated holiday spending.
Now, anyone can look at a graph and see a pattern, right?
Yeah.
But the Quant Connect researchers, they didn't stop there. They wanted to make sure that this wasn't just some random coincidence. So they used some statistical testing to confirm that this pattern was actually significant, meaning, it wasn't just a fluke. And guess what? The numbers backed up what they were seeing in the graphs.
And they weren't just seeing things. There really does seem to be something to this whole holiday effect with Amazon. But what I think is really cool is they didn't just identify this pattern. They actually took it a step further. And they tested out 3 different trading strategies based on this whole idea.
Right. They wanted to see if they could use this holiday effect to potentially make some money. The first strategy was pretty straightforward. You basically just hold Amazon stock for those 2 weeks before Black Friday and Prime Day. Then you switch back to the S&P 500 once the holidays are over. And when they back-tested this, meaning they looked at how it would perform historically, going all the way back to 1998, the results were pretty impressive.
Wait, hold on. They went back to 1998. That's before Amazon even had Prime? Okay, so what kind of results are we talking about here? Because I know you finance folks. You love throwing around terms like Sharpe ratio. That just leave the rest of us scratching our heads.
Yeah, you're right. We do get a little jargon happy sometimes.
Yeah.
So the Sharpe ratio basically tells you how much extra return you're getting for the risk you're taking. The higher the number, the better. And with this first Amazon strategy, they found a Sharpe ratio of 0.51.
Okay, but what does 0.51 actually mean in the real world?
Well, to put it into perspective, just holding the S&P 500 during that same time period had a Sharpe ratio of 0.303. So in simple terms, by using this Amazon strategy, you could potentially be earning significantly more than if you just stuck with the general market, all while taking on a similar amount of risk.
Okay, that makes a lot more sense. So basically, we're talking about potentially boosting those returns by riding this pre-holiday wave with Amazon stock.
Exactly. Now, that was just the first strategy they tested. Ready to hear about how they got even more creative.
All right, lay it on me. What other tricks did they have up their sleeve with these Amazon strategies?
So strategy number 2 involved something called put options. I know options can sound kind of intimidating, but stick with me here.
Okay.
A put option basically gives someone the right to sell a stock at a certain price, even if the actual market price goes lower.
Okay, so it's kind of like insurance for someone who's worried the price might drop.
Exactly. But in this case, the researchers weren't buying insurance. They were actually selling put options on Amazon stock right before the holidays. It's a little bit of a bold move because if the price of Amazon goes up, which is what they were expecting, they make money.
So they're basically betting that the price of Amazon is going to go up, and they get rewarded for being right.
You got it. And get this, when they backtested the strategy from 2012 to 2024, it had a 100% win rate. Now, it's super important to remember that past performance doesn't guarantee future results.
Of course.
But still, that kind of track record definitely makes you sit up and take notice.
Wow. 100% win rate. It's pretty hard to ignore. But options trading can be a little risky, right?
Yeah.
So I'm guessing they had a more, let's say, balanced strategy up their sleeve.
You know me too well.
Huh?
Strategy number 3 was all about combining that put option approach with something a little bit more familiar. Holding the good old S&P 500. Remember, that's like having a little piece of the entire market.
So it's like a little bit of a hedge in case things went south with the Amazon bet.
Exactly. Diversification is key, right?
Right.
And guess what? This combined approach actually led to an even better Sharpe ratio than just holding the S&P 500 on its own. During that same time frame, 0.722 compared to 0.657.
Okay, so we've got some pretty solid evidence here that there might be something to this holiday effect when it comes to Amazon stock. But remember that blog post you mentioned?
Yeah.
The author was wondering if this whole concept could apply to other retail stocks too.
Yeah. What if this holiday effect isn't just limited to Amazon and those big shopping days? What if we can find these same patterns with other companies and their own unique critical dates?
I like where you're going with this. It's like we're financial detectives looking for clues in the stock market.
Uh-huh. I like that.
We could be uncovered in these hidden holiday effects all over the place. But how would we even begin to find them? It's not like companies have this giant calendar that says buy our stock on this day.
Uh-huh. Right. It's not quite that simple. But there are definitely ways to approach this systematically. Think about it. Every company has certain events or periods that are like super crucial for their sales. It could be a major product launch, a seasonal promotion, even a big industry conference where they announce some game-changing deal.
Okay, so we're looking for those key dates that are specific to each company, kind of like these mini holiday effects,
And it's great.
tailored to their own business cycle.
Precisely. For example, imagine like a video game company. That always releases their newest console right before the holidays. You can bet that their sales are going to spike during that time. And that anticipation could potentially be reflected in their stock price leading up to the launch.
Okay, I'm starting to see the potential here. But just because a company has a big sales event, that doesn't automatically mean their stock price is going to jump right.
Of course not. There are so many factors to consider. Overall market sentiment, industry trends, even just plain old luck.
Right.
But that's where the research and analysis comes in. We can't just blindly assume that any company with a big announcement is going to see their stock soar.
Right. We need to look at the data, the historical trends, maybe even factor in things like analyst predictions, competitor activity. It's like putting together a giant puzzle, but with potentially lucrative rewards if we can crack the code.
Exactly.
So to recap, what we've learned so far is that there might be a holiday effect with certain retail stocks. And that same logic could potentially be applied to other companies and their own unique critical dates. It's like we've stumbled upon this like secret code, but instead of ancient symbols, we're trying to decipher the language of the stock market.
Uh-huh. I love that.
And the cool part is, this code isn't set in stone. It changes as new trends emerge and consumer behavior shifts.
Right. That's what makes it so fascinating. It's not just about finding like today's holiday effect. It's also about anticipating what those crucial dates might be in the future. It's like, think about how the rise of online shopping created entirely new events, like Singles Day, which is massive in China.
That's a great point. And who knows what other events or trends are going to gain traction as technology keeps evolving. And our shopping habits change. It feels like there's a whole world of potential holiday effects out there, just waiting to be discovered.
Exactly. And that's why staying informed and adaptable is so crucial in the investing game. We can't just rely on what worked in the past. We need to constantly be learning, adjusting our strategies, keeping our eyes peeled for those emerging patterns.
It's like we're not just investors, we're explorers, charting new territories in this financial landscape.
I love that analogy.
And the Quant Connect research has given us a pretty amazing compass to navigate with.
And with the right tools and the right mindset, we can venture into those uncharted territories and potentially uncover some hidden treasures along the way. It all starts with that spark of curiosity, like the one you had. when you sent us those articles.
This whole deep dive has really energized me. It's a reminder that the world of investing is full of surprises, and there's always more to learn, even for someone like me, who thought they had a pretty good grasp on things.
That's the beauty of it. It's a constant journey of discovery and learning. And who knows, maybe our conversation today will inspire you to uncover your own holiday effect for a completely different industry.
All right, so to wrap things up, we started with a pretty simple question. Could those holiday shopping sprees actually translate into opportunities in the stock market? And what we've discovered is that there's definitely evidence of a holiday effect, at least with Amazon around Black Friday and Prime Day.
But even more importantly, we've kind of opened the door to a whole new way of thinking about investing. It's about looking beyond those traditional indicators and considering those unique events and dates that can really drive a company's performance.
And as we've discussed, research and analysis are key. Don't just jump into anything blindly. Take the time to understand the company, the industry, and all the potential risks involved. But most importantly, don't be afraid to let your curiosity lead the way.
Remember, the most successful investors are those who never stop learning, adapting, and yes, even having a little fun along the way.
Happy hunting for those holiday effects. Till next time.